So why are investors worried? Well, 2020 was a tough year. 2022 was a tough year. And we had a really great year in 2024. But most investors kind of remember and say, you know what? This feels really expensive. This feels kind of weird. So again, here's the link again about the bubble to Mr. Howard Marks's memo. Strongly suggest you have a go look at it. It's not that long of a read. The data here in one of the charts that he uses is from JP Morgan. And the concept's fairly simple here. As asset prices go up in value, the expected return for the next 10 years goes down. So the shaded line is roughly where we are in terms of valuation on a price to earnings ratio. And the markets to the right of them is when the markets were more expensive to that than what we are currently. What was the expected rate of return? Effectively zero. And you have to go down in valuation in order to expect a higher 10-year rate of return. So while we may or may not be in a bubble, we can certainly agree that the top 10 names, the technology-laced names, are very, very expensive. And so investors today that are committing new capital, this chart kind of tells you that the expected rate of return for the next 10 years might be lower than it has been in the past. It just makes sense.